Good afternoon. It is Sunday, the 21st of November, 2021. We are currently trading again. You can look at the balance of my currency, or if the resource in the account is 5 G's plus $5. It seems like the market has taken away the 55 cents that I had in the account because uh, basically there is some exposure. Basically, the market is moving in those positions that are against my position in terms of I bought the currency at a certain price and it's moving in a different direction. It's moving below the price at which I bought it. So if I went to the market right now and sold it, I would make a loss. And if you look at those currencies, for the I bought the Great Britain USD at a previous point in time, and right now it is about $36 or 35 or $36 in the negative. So it's about 36 points below where I bought it at. I bought 10 units, and basically what would happen is I would lose money if I went to the market and sold right now, so therefore I'm not doing that. Same thing with Euro, USD, and also silver. The reason why I don't exit the positions and basically start over is because every time you lose a trade, or you lose resources, or you lose money, there's no guarantee that the exact same thing that you're just trying to avoid won't happen immediately in the next time. So therefore, markets fluctuate, markets go up and down, and definitely they can take your shirt. So therefore, it's better for you to basically ride the storm rather than you trying to get out now and lose. Say if I was to sell the Great Britain USD or the Euro, I would lose $36 or $55 in relation to the Euro USD, and basically if I were to buy another currency pair that could do the exact same thing in the next currency pair. So that's why I don't believe in cutting your losses and trading and selling or basically canceling out the account, canceling out the currency pair. I believe in riding the storm because you can buy another currency pair and they do exact same thing. So I mean everyone's risk tolerance is different. My risk tolerance is what it is, that I ride the storm, and I only trade positive trades. Right now it's not positive, so I'm not going to trade it. At some point in time in this week, it will be positive, and I will trade it at the time. Till then, I will ride out the storms. I mean, also tell you, oh, that's my philosophy, and that's how I trade. I mean, everyone's trading is different. Everyone philosophy is different. They might want to reduce their leverage or risk, so therefore they might can't exit out the trade. But then instead of having a balance of $5,005, they would lose $36 or $55 on those trades, and they'd have a reduction in the balance that they would have in the account. Because right now there's a balance less. There's unrealized profit or loss of $69.65, and that fluctuates. So that they would have realized that loss and then taken a cut. I don't do that, and so my philosophy is different. My policy is different. I can go back and show you the trades that we did do this week. This is what we did this week. We started out with a few trades. Here is some of the trades that we did this week. We sold. We bought. We started trading on November 19th. We bought, as you can see, Great Britain pound, and we had some open positions. We also bought and sold some other positions here, and I'm just showing you what the activity that we carried out this week. And so that's where we're at right now. Though this is the unrealized profit or loss, which was at the end of on Friday, $70.35. That was what we had on Friday, because we didn't exit out the trade. But basically, this is what we started out. So we lost by not exiting out that trade. We lost 65 cents because it was $5.65, and now it is $5,005. So we lost 65 cents. Unrealized profit made us lose 65 cents in that over the weekend. But that amount of money, we're going to get that back, so that's not a big deal. But I just want to let you know my reasoning on my rationale, because like I said, if I exit out those currency trades, those currency pairs, this is the broker that I work with, Gain Capital. Yeah, they basically would. You can go into the market and you can do the exact same thing again. And it can happen very quickly. So I don't do it. And right now you can see this is the silver USD. This is where I bought it at, and this is where it is right now. When it goes back above that price, I'll sell it. Same thing with Great British pound USD. This is where I bought it at here, and this is where it is right now. The present market price. Once it goes back up, I bought it at 134.8. Now it's at 134.446. So it's gone down by 35 pips or basis points. I think it went down by 35 pips. So basically, that's where I'm looking at right now. The Euro USD. I bought it at this point, which is 28.2, which was I'm in the hole by $28.2. I bought it at 1.134, and it has decreased this amount right here to 1.1285, and this is where it's gone right now. And when it goes back up above that price, I will sell it. I will trade again. But right now it's in a position where I'm just holding my own. So that's what I'm doing. Just basically ride the storm. Basically, currencies and stocks go up and down all the time. If you're scared and if you get apprehensive when you sell the stock, what happens is when it does rebound and it realizes it goes higher above where you bought it at, you can't jump back on by that time, because by that time it takes a moment or two for you to jump back in and realize that profit. So at least in currency trading, they don't just allow you to. At least I've noticed that they don't just allow you to jump back in right away. So you end up having to wait a minute. So therefore, that's why I just ride the storm. This is Sunday. I usually don't really trade on Sundays, but because I have an open position, I just want to make sure that I'm aware of what's going on. And if it became profitable today, I would say Sunday is not really a big day, because most of North America is not trading. Europe is trading and other countries, but North America, I found, usually doesn't trade too much on Sundays, because I guess it's really a day of rest, I found. So it could be my own anecdotal evidence, but that's what I perceive. Now Monday they'll be trading quite a bit more. They'll be more active, a lot more fluctuation in the markets, and you'll see the markets will fluctuate. You'll see those lights going off, those numbers going red and green, quite a lot more on Monday through Friday. But on Sunday it doesn't do that, because not a lot of people trading as much. A lot of businesses are closed, so they're not trading as much. Because the real big businesses, when they're buying and selling currencies to purchase some products and acquire possessions, that's what causes the market to fluctuate basically as much as it does during the week. So that's the end of my the end of my video for today. I hope that you have a great day, and that I'll see you in the next video. Take care. God bless. Bye-bye.